Welcome to This Week in Money. I'm Jim Goddard. Today, Ross Clark from chartsandmarkets.com talks about some critical numbers to look for on the gold and crude markets. Trends Journal publisher Gerald Celente comments on the geopolitical circumstances that could push the price of oil to $100 a barrel and what that would do to the global economy. InsideTrackTrading.com president Eric Hadik looks at the cycles we're seeing on the markets and where they might be taking us. Plus, at the end of the show, we'll have company showcase updates from American Manganese president Larry Reaugh and Aben Resources CEO Jim Pettit. We'll talk to Ross Clark right after this.
I'm Douglas Mason, CEO of Naturally Splendid, symbol NSP on the TSX Venture Exchange. Naturally Splendid is a biotechnology and consumer products company focused on the global cannabis and health markets. Naturally Splendid is expanding distribution in this rapidly growing market with products currently in Canada, the USA, South Korea, Germany, and Australia. To view our comprehensive company presentation and for more information, please visit our website at naturallysplendid.com.
Cypress Development Corp's flagship lithium project is located just east of Albemarle's Silver Peak mine in the heart of Clayton Valley, Nevada. A 12-hole exploration drill program for lithium-enriched claystone on Cypress's 100% controlled properties is now underway. Cypress Development Corp trades on the TSX Venture Exchange, symbol CYP, the pink CYDVF, and on Frankfurt's C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Welcome to This Week in Money, the source for market opinions. Here is Jim Goddard.
My guest is Ross Clark from chartsandmarkets.com, where you'll find insightful market commentary and timely technical analysis. Welcome back to This Week in Money.
Always look forward to it, Jim.
Ross, are we seeing some critical numbers on the charts right now?
Yeah, we've had some choppiness, and it has then led to some overbought and oversold levels as the market's gained a bit of momentum here in the last 10 days or so. And there's a few things that we've really got to be on the lookout for. The precious metals, we had got some good buy signals on gold itself back in middle of August, and then the GDX and the miners in early September. Well, they've now rallied for a good 9 weeks off the bottom, and we're getting overbought readings in the last 2 weeks on the weekly charts. The Commodity Channel Index, the CCI 8 that we keep an eye on, when you are in a downtrend, when it gets overbought, especially after, this will be the first time we've gone overbought since market broke down in the springtime. And usually that first good reading in the CCI 8, as it moves through the 20-week or the 50-week moving average, and that's what we are right now. We're just straddled above the 20-week. That becomes a lid here for the price. So the optimum level was the 1232 for gold. If it were to spike up in a very short period of time, you could see maybe a 1255, but I think that would be very, very short term. What we have to watch going forward is the first week now with a lower low should be the catalyst to take us back down to probably new lows for the year before we can be capable of having the next decent rally. So keep an eye on 1220. The other thing that did happen on this rally, and we see this commitment of traders numbers as of yesterday, there's a big shift here. The speculators who had been net short, there's a 54,000 shift in the size of those positions, so they are now net long. You've had a 57,000 shift as far as the commercials are concerned, and they are now short. So we've taken care of the excesses from the COTs, and we've got an overbought. So time for caution out there. I would suggest really tight stops as far as the precious metals are concerned.
Are we seeing critical numbers in crude oil as well?
Yes. The other side of the coin, crude had been up to 75, and we said that if it started to push down through the $71 range, that it really was mimicking, just following about 2 to 3 months behind the same price pattern that we had seen in copper when it tested 330 twice in the spring. So in this case, the crude having been up to 75, and now instead of just holding a 50% level for support of this most recent run, which would have been around the 71, 71.5 range, it has just sliced straight through that. We traded as low as 68.5 during the week, closed off the week just below 70. And we've got, as of the last couple of days, a sequential 9. So we've had 9 consecutive days with closes below 4 days earlier. Normally, you would see an interim reversal from there. But if you don't get that bounce, you don't see any signs of strength, this thing can feed on itself. And because of where we sit in terms of the seasonals and where we sit on the 10-year cycle, wouldn't be at all surprised if you start to move through that $68 level that we'll be looking at prices probably close to $60. Now, from a political perspective and what's happening with the Saudis and with the American administration, who knows what might happen on the upside. But for now, the technicals look heavy and wouldn't be at all surprised to see a bigger correction once we break 68.
And Gerald Celente will be coming up, and he'll tell us what might happen if oil decides to go up for political reasons and hits $100.
Yeah. Well, and that's it. If because of where we sit in this 10-year cycle, you do get very large moves going into the 9th year of a decade. And so whatever low comes into place here and normally it would be from where we are here in October through as late as January. But once that low is in place, you can be looking at a very significant move in next year. Actually, it's a 2-year run when I think back on it, on the upside. So, you got to be looking for short-term weakness, but that should be just a really good buying opportunity. And, thinking of energies, we put out a report a week or so ago here on natural gas and how it likes to peak out mid-October through mid-November as part of its first seasonal run. And if that has been a decent run, then the correction that you have after that, and we've gone from 275 or 265 up to the 3.25 level on nat gas. If it has a nice pullback in here, coming off an interim high, you can be looking for a good opportunity to go long nat gas for a play on a November, maybe early December correction, and not only just in the commodity itself, but also in the stocks, because the stocks tend not to do as well on the first seasonal rally off a bottom, the September through mid-October, mid-November, but they do far better on that if that second rally takes hold. So we've got some characteristics to look for once nat gas starts to correct back down for buying opportunities, and that's the type of thing that we'll send out to subscribers.
Ross, thanks a lot for being on the show.
Good to be with you, Jim.
My guest has been Ross Clark from chartsandmarkets.com. Coming up, Trends Journal publisher Gerald Celente, next on This Week in Money.
Always consult your investment professional before making any investment decision.
Grand Portage Resources recently completed the 2018 drill program on its 100% controlled Herbert Gold Discovery property located in the prolific Juneau Belt in southeast Alaska. Drill results are expected through late 2018. Past drill results included numerous multi-ounce gold assays on multiple veins. Grand Portage trading symbols are GPG on the TSX Venture, GPTRF on the OTCQB, and GPB on Frankfurt. For more information, please visit our website, grandportage.com.
Hadik Ventures Corp. is a potash exploration company focused on the Korat Basin in Thailand, the world's largest undeveloped potash resource. Hadik's management has extensive potash exploration and development experience in Thailand. Hadik will have marketing advantage compared to Western producers. Drill program commences this spring. Hadik trades on the TSX Venture, symbol VCV, and on Frankfurt, symbol V8V2. Visit our website, hadikventures.com.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back to This Week in Money. We're speaking with Gerald Celente, publisher of the Trends Journal, available online at trendsjournal.com. He's speaking to us from historic Kingston, New York. Gerald, welcome back to This Week in Money.
Great being on with you. Thank you, Jim.
Gerald, what do you see ahead for the U.S. stock market? It's been pretty bumpy.
Well, we were the first to call the Trump rally back in November of 2016, and we were the first to call the end of the Trump rally in February of 2018, and said it would go into correction territory, which it briefly did. And we had said that the markets would go up more, but they essentially have peaked. And there's more downside potential than upside potential. So what you see is what you get right now. And when you see the Dow, for example, earlier in the week, jumping up nearly 550 points, and the next day closing lower, and markets around the world not picking up on that bounce, you know that there's trouble.
For you, what's the best thing to do when you're in a market like this?
Well, for me, and I don't give financial advice, you'd say, how high do you really want it to go that would really make you happy? And what number is that? And how low does it have to go before you sell out? So I'd put a stop loss in, and I look at a high point. So if you believe the markets are going to go up higher, and they do, and it reaches your number, then I would sell out. And I'd put a stop loss on the bottom. How low does it have to go before I sell it? So that's what I would be doing.
Gold is showing some strength. How high does it have to go to hit kind of a trigger point?
Oh, what I've been saying for over 5 years, 1,450. And that's the breakout point for us. When it stabilizes over that, not only do we think it's going to strengthen, we think it will spike after that.
Does silver look like it's lagging gold?
Yeah, I'm not really silver's always lagged gold in so many ways. In other words, gold has to set the stage. And when gold moves up, silver will follow. And also, very important with silver, it's used also in industry, production. And if there's a global slowdown, there'll be less demand for it. But gold to us is the leader, and silver's the follower.
We hear countries are selling off U.S. treasuries and the U.S. dollar, but it doesn't look like they're buying gold. What are they doing with their money?
Well, that's it. They don't have any money. You mentioned that the countries are selling U.S. treasuries and the U.S. dollar. The dollar's getting stronger. And you're looking at the reason the dollar's getting stronger, by the way, of course, the rising interest rates, but also other nations' economies weakening. So the stronger the dollar gets, the weaker their currencies go, and you're seeing it. I mean, look at India, a huge buyer of gold. How's their rupee doing against the dollar? It's at an all-time low. What's gold based in? Dollars. You got to buy gold with declining rupees, so you need more of those rupees to buy gold. So that's what's really holding it back. Now, there's a global slowdown as we see it, so they're not doing anything with their money other than trying to stay afloat.
Are oil prices an important economic indicator for the global economy?
Absolutely. Again, I just mentioned what's going on with the declining currencies around the world. I mean, you're looking at Argentina where they lose 50%, the peso down against the dollar, interest rates at 65%. South Africa, the rand, go around the country, go around the world. The Turkish lira, I mentioned the rupee. Go to look at the Indonesian rupiah. One after another, the currencies are declining. Oh, oil prices are going up. What do they buy oil in?
Good old U.S. dollars, yes.
Right. So the lower their currency goes, the more it costs them to buy oil. If oil prices spike above $100 a barrel, we are forecasting a global economic crisis and a global market meltdown.
Are President Trump's fair trade tariffs and the Fed raising interest rates affecting stock markets and currencies around the planet?
Not so much the tariffs. That's more talk. And by the facts, it's the tariffs. I mentioned when we called the end of the Trump rally in February, and that's when the markets began to decline. And it was because the Fed was announcing they had an aggressive interest rate policy where they're going to raise interest rates at least, this year we're going to raise them 3 times, and they're going to raise them another 3 times next year. And the stock markets, the equity markets can't take expensive money. It's been one Ponzi scheme from the beginning, and they're starting to end it by interest rates rising probably around the world at some point. So that's what's bringing the markets down. And again, the currencies are going down because the stronger the dollar gets, the weaker their currencies go.
President Trump says he considers the U.S. Fed to be his biggest threat. Do you know what he meant?
Yeah, I know what he meant. The guy's in the real estate business. He knows what happens when interest rates go up. Real estate sales go down. They're already going down. Look at the numbers. They're coming out every day. In the States over here, they're way off. Whether it's new home sales, existing home sales, new mortgage applications. And so the higher rates go, the more the economy slows down. And what's Trump interested? He's interested in making money. I mean, that's who he is. And of course, fame. He's the presidential reality show. We have the champion and the apprentice champion over here. So that's why he's concerned about the Fed.
Do you expect the yuan to continue to weaken against the U.S. dollar?
At this point, yes. You're looking at the Chinese, the Shanghai Composite Index right now. It's down since January, 30%. Imagine if the Dow was down 30%. Imagine. There'd be panic on the streets. So, going back to China, their bubble is burst. They have a debt-to-GDP ratio around 300. They got over $30 trillion in debt. You're looking at slowdowns in auto sales, big-time slowdown. Worst slowdown in 30 years. And you're looking at capital investment into the country, investment into the infrastructure at 1992 levels has fallen to. You just saw the new GDP numbers came out, lower than expected. And you could bet that those numbers are lower than they're saying because they have a history of rigging the numbers. So they have real problems. And the stock market is showing it.
We'll have more with Gerald Celente when This Week in Money returns.
MGX Minerals is revolutionizing the new energy economy with patented lithium extraction technology, replacing traditional solar evaporation using low-cost, low-energy nanofiltration. The first system of this paradigm-shift technology is currently being commissioned. MGX Minerals trades on the CSE, symbol XMG, the OTCQB, symbol MGXMF, and Frankfurt, symbol 1MG. For more information, visit our website, mgxminerals.com.
I'm Kelly Jennings, CEO of PowerBand Solutions. PowerBand is a cloud-based provider of auction, inventory, and finance solutions that make buying, selling, and financing vehicles more efficient. PowerBand Solutions trades on the TSX Venture Exchange symbol PBX and on the OTCQB symbol PWWPF and on Frankfurt symbol 1ZV. For more information, please visit us at powerbandsolutions.com.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back to This Week in Money. We're speaking with Gerald Celente. Gerald, what's happening to the stock market in China and the rest of the Asian market?
Well, again, as I mentioned, the stock market in China is down 30% since January, and it's down 50% from its high that it reached in 2015. And it's the same thing with markets around the world, the equity markets. They're all, the United States is really basically the only market that showed real strength. The rest are either stagnant or in bear market territory.
China's real estate market is now in trouble. Now, people from mainland China bought up real estate in Vancouver and around the world. What are those people likely to do? Sell their North American investments to pay off their debts in China, or hold on as long as they can in North America?
They'll probably hold on as long as they can. By the way, you know what's going on in China with the real estate market going down. You know, there's riots in the street. You know, people that's, you know, paid top dollar for places in Shanghai and Beijing and other areas, and now the prices are going down. They're smashing the storefronts of the brokers and the real estate dealers that put the developers that put these deals together, and because they're lowering the prices, and they're saying, how could you lower the prices when we pay this high price for it? So there's a real problem over there. It's hard to say. I would speculate also that they would probably want to keep their real estate overseas, because with the yuan in decline, at least they would be able to get more of their money by selling something overseas that's worth more money, and they'd rather hold on to it, possibly. But again, it's hard to say, because, you know, if they're living in a place in China, it's their house, their home, you know, they're going to have to maintain it, so they'll sell overseas. So it's a flip coin.
With China's exponential growth powered by massive credit creation, could they be in for one of the hardest landings?
Absolutely. We're telling all our subscribers, keep an eye on China. We've been writing about it daily, virtually, and talking about it daily in our Trends in the News broadcasts. Now, China's the big one. This is the world's second largest economy, and by many measures the biggest. And when you're looking at what's going on, they got 1.3 billion people there. And it's way overextended. You see the People's Bank of China keeps lowering the reserve requirements, letting more and more money flow into the system. They're going to do everything they can to prop this thing up.
Could China survive on its own by producing for its people and not trading with the outside world, or are they likely to open their doors to the world?
Well, you know, China's a huge importer, and they have 1.3 billion people. They could probably, well, you know, there's some things they're going to have to buy, like energy. They're the world's largest importer of energy. And so there's some things. But I believe that the future is going to be more and more, as you see the anti-establishment trends taking place around the world, more and more you're going to see self-sustaining economies. And nations that have the human and natural resources to do it are going to, you know, buy local, which means buy national, and for the same reason, to support your own rather than others. So yeah, we think they have a great opportunity of being a self-sustaining economy, as does Canada, the United States, you know, with the natural resources and human resources that we have.
If some manufacturing leaves China for the U.S. and other countries, will the commodities used for that manufacturing still be in demand?
Well, if demand for the products are. Again, when we're talking about China and commodity prices, I mean, China soaks up over half of the copper produced each year. So if they slow down in their economy and the global economy slows down, all the commodity prices go down, as they have since copper, for example, you know, it's down from its June highs and keeps falling because the Chinese economy keeps weakening. So the weaker the global economy is, the lower the commodity prices.
Is China versus Taiwan likely to be a concern going forward?
Absolutely. Absolutely. They consider Taiwan China, and they're going to get it back at some point, just like they got back Hong Kong.
We can see how sensitive China is when they crack down on airlines that use the word Taiwan instead of Taipei.
Yeah, you got it. And hotels as well. Yeah, anybody. Yep. And so they're going to fight this one. They're not going to let it go. I believe, wasn't it called Formosa when I was a kid?
Yes, it was. How could the stolen intellectual property issue ever be solved with China?
Well, it's the stolen intellectual property isn't. That's kind of a misnomer in the sense that the European and North American manufacturers that wanted to get their products made by slave labor going back 20 years ago plus and went to China, they gave them the technology. Chinese made it very clear. You come over here, you open a plant, you're only a 49% owner of the plant, and they, okay, we'll do it because we want to get our stuff made cheap so we could resell it and make more profit. So the North Americans and the Europeans, they sold out the technology. China didn't steal it.
Is China likely to have spies in industry around the world?
I don't know. I really don't. But again, it's the industry around the world is all in China now. Though I mean, what are they making anywhere else that they're not making in China? And again, they when I say they gave it away, they gave it away. Of course, the Chinese took it when they put it there, but they didn't steal it. They just took it. It was given to them. And they don't need spies around the industry around the world. The whole world is there now.
There are allegations the Chinese government is trying to influence the municipal elections in the greater Vancouver area. What's your thoughts on that?
I think it's a lot of baloney. I really do. And I don't believe any of this stuff about outside influencing the elections. For example, in the United States, there's not one shred of evidence that the Russians had anything to do with the 2016 presidential election. It's assumptions. It's nothing more than that. There's no hard evidence. And now, of course, assumptions mean hard evidence, but in reality, they don't. And the politicians keep using these kind of things to boost their positions. So I don't find any truth in it.
We'll have more.
I should say I don't find any substance in it. When you can show me the proof, then I'll believe it.
We'll have more with Gerald Celente when This Week in Money returns.
I'm Greg Johnston, CEO of Carl Data Solutions, an industrial Internet of Things company that provides big data solutions for monitoring critical infrastructure. Carl Data offers machine learning and predictive analytics features through our cloud-based applications to deliver key asset-saving operational insights from massive amounts of data. Carl Data trades on the CSE, symbol CRL, and the pink symbol CDTAF. For more details on Carl Data, please visit carlsolutions.com.
Hi, I'm Douglas Mason, President and CEO of Magnum Gold Corp, MGI and the TSX Venture Exchange. A 2015 drill program on the LH property intersected several high-grade gold intersections, including 11 meters of 20.66 grams per ton gold. Additional drill targets on the LH property have been identified by a 2018 drone airborne magnetic survey to further evaluate a pyrrhotite-enriched gold-bearing system. Please visit our website at magnumgoldcorp.com.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back to This Week in Money. We're speaking with Gerald Celente. What's happening in the automobile market?
Well, on the technology end, the driverless cars, we call it a driverless cliff. It's not going to happen. We're looking at, tens of millions of recalls each year, and they're going to have driverless cars when they can't fix an airbag or brakes or ignition switches and on and on. So we don't see that happening at all. But on the bigger end, we were talking about China before. China's car sales are way down. In the United States, car sales are starting to go down. So we see this as the beginning of a slowdown, and it ties back into an earlier question. Back when the Clinton administration was with the first campaign in 1992, the campaign slogan that they would use within the organization, not for the public, but to focus on the issue was, "It's the economy, stupid. Now it's interest rates, stupid." Going back to automobiles, the higher the interest rates go, the lower the sales. It's as simple as that. Same thing with housing.
Have marijuana stocks hit a bubble top?
Probably in some of the areas, but we believe that this is just the beginning. I mean, Canada just became legal this week, and outside of Uruguay, that's the only other one. I think how many nations are there in the world? So you're going to see one country after another start going legal, and that whole the cannabis business is going to continue to boom. It's reefer money madness, and beyond that, you're going to see a lot of breakthroughs more and more in medical marijuana. As I say, if the planet could feed us, could it heal us?
What do you see ahead for the U.S. midterm elections?
Well, they'll probably go Democratic, but people are forgetting that midterm elections, what happened after Trump won and had a majority in both the House and the Senate, they got creamed. And people forget how unhappy the Americans were with him because he lied about what he said he was going to do as a candidate and didn't perform as a president. He came in as a peace president, won the Nobel Peace Prize, and then he goes on to a troop surge in Afghanistan of 33,000 troops. Said he was going to bring the banksters to jail, and didn't convict one of them. So again, you have these turnovers. In the long term, it won't mean anything.
Are more people turning off so-called fake news?
Yes, a lot of them are, but the ones that still go to the mainstream news, that's all they're getting, and those numbers are still holding up somewhat. And the fake news is, it's junk news more than fake news. It's stuff. Why do I have to know who Stormy Daniels is until I can remember her name and know what she looks like? And the same thing with this, the guy that allegedly got killed in the Istanbul embassy, that the Saudi journalist. It's in the news all the time. How about the Saudi slaughter of what's going on in Yemen? People don't know what's going on there. War started 2015, and from Washington D.C., the Saudi ambassador launched it. It's the worst humanitarian crisis in the world, according to the United Nations. It's the greatest famine now they're looking at in 100 years. And if you ask people about Yemen, they'll ask, what's a Yemen? So it's not fake news, it's junk news. And that's all they keep shoving down our throats.
Yeah, the lead story about reunited St. Bernard puppy brothers or something. Yeah, that was one of the lead stories here.
Wow.
Yeah, wow.
Yeah.
What's your latest globalnomic view?
Well, there are two of them. Of course, equities and geopolitics. And we're telling people, watch very carefully what's going to happen when the sanctions go on Iran. They take effect on November 5th. And they put an oil embargo on them. Basically, they won't be able to sell oil. The destabilization in the Middle East with Syria and the Saudis and Yemen and Israel and that area. If there's an explosion there, and I mentioned earlier that if oil goes to $100 a barrel, now it's Brent crude is floating around $80 a barrel, that's what will drive the prices up. So the geopolitics we're interested in the most are in the Middle East, because if there's a Middle East explosion, it'll be the shock felt around the world.
What future trends are you looking at?
Well, those are basically those as well, and that we're in terms of in geopolitics and economics. But on the medical front, the robotics and whole health healing, areas such as new technologies that could identify ailments before they were able to be identified before. So that kind of thing, mostly outside of the geopolitics and economics.
Pee in a bottle and detect cancer kind of thing.
Yeah.
What's the latest with Occupy Peace?
Well, we're putting together a program, and we're hoping to launch an Occupy Peace Festival next year in Kingston. We'll see how it goes. We launched our last Trends Journal magazine. It was a big issue about war and peace and how everybody was fawning over the warmonger John McCain. And people aren't interested in peace. We have metrics that show where our readership is. And when we talk about peace and issues like that, we get the lowest interest within the magazine. When we talk about cryptocurrencies and marijuana stocks and economies and oil and geopolitics, we get spikes. So in order for us to have Occupy Peace, a movement that has legs on it because there's a peace plan, bring home the troops, secure the borders, meaning put the troops to work to rebuilding our rotted infrastructure, force Congress to vote to go to war, which they have not done since 1941. And the other one is to have referendums on each state ballot where we tell Congress how to vote, we the people, because we're the ones that fight and die and pay for the wars. Until we get the money and support from people, from the population to Occupy Peace, we can only do so much. So they could go to the website, occupypeace.com, and to give peace a real chance, because you cannot create joy and beauty in a world of fear and terror. And we think we could turn it around because most people really want peace, not war.
How can people find out more about the Trends Journal?
Oh, simply go to trendsjournal.com, trendsjournal.com. We have a monthly magazine, trend alerts weekly and more as we need them, and Trends in the News broadcasts every Monday through Thursday night.
Gerald, thank you so much for being on This Week in Money.
And thank you, Jim.
My guest has been Gerald Celente, publisher of the Trends Journal at trendsjournal.com. He was speaking to us from historic Kingston, New York. Coming up, Eric Hadik, next on This Week in Money.
Aben Resources Limited is a gold exploration company with significant projects in British Columbia, Saskatchewan, and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the pink symbol ABN.V. Surrounded by world-class gold deposits and mines, Aben's 23,000 hectares Forrest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at abenresources.com.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMY.V, and Frankfurt 2 AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back to This Week in Money. We're speaking with Eric Hadik, president of InsideTrack.com and InsideTrackTrading.com. Welcome back to the show, Eric.
Oh, well, thanks for having me back, Jim.
Our conversation's taking place on Thursday, where again we're seeing a red board for the major markets, the same kind of condition we saw a week ago. Are we seeing a gradual step down in the trading markets as opposed to one giant crash?
Well, I think that's definitely what we are in the process of seeing. From a much broader perspective, I been talking since late 2017, where I thought that we would see a progression of multi-month peaks during 2018. I was looking for 3 primary peaks and some significant sell-offs in between, but that would be kind of a topping process. I sometimes just use the analogy of a old wooden roller coaster getting over the crest of the initial hill, where initial cars make it over the top while others are still heading for their peaks. And it's not until all the cars get over the peak that then an accelerated decline can really take hold. And I think that's what you see in a lot of the indexes too, that you'll see initial ones that hit their peaks, and then sell off. And then on the next rally, they might top out a little bit lower than their previous peak, while a lot of the other indices go to higher peaks. And just that type of succession that I didn't think the biggest threat would emerge until the middle of 2019, but that we would see some intervening sell-offs that would certainly be double-digit percentage sell-offs. And as we were coming into this period, I kept describing and continue to this uncanny 2-year cycle that has been impacting equity markets throughout this bull market, really since the 2009 low and even once before that. But I did a couple of articles on this back in September, and I'd be happy to send out copies of them to any of your listeners that request it. But if you looked back over the last decade and look at this 2-year sequence, it has kind of governed the major moves within the year. And let me give an example. Even back in 2010, 2014, and 2016, and then again in 2018, you saw very significant early year sell-off, every one of them bottoming between February 3rd and 12th. In 2014, the Dow dropped about 1,250 points, a 7.5% decline, bottomed on February 3rd to the 12th. In 2016, Dow dropped 2,500 points, about a 14% decline, bottomed February 3rd to the 12th. Then again this year, Dow dropped 3,200 plus points, about a 12% decline, bottomed on February 3rd to the 12th. And like I said, even back in 2010, same thing, about an 8.5% decline in the Dow that bottomed on February 3rd to the 12th. After that initial low took hold each year, then the market would work its way back up to the highs and eventually spike just above them. Each time it has taken a bit longer. In 2014, it took 4 to 5 months for the Dow to get back up to its previous peak. In 2016, it took 5 to 6 months. And then this year, it took almost 8 months. And the Dow finally did that on September 21st, and that was one of the final triggers that we were looking at. It was kind of like that last car in a roller coaster finally reaching its peak, because the NASDAQ 100 and the S&P 500 had previously attained the same thing, getting to new highs on the year. But if you look back after those peaks were set on this 2-year cycle in 2014, there was a sharp multi-week pullback, same thing in 2016. And in 2018, it was setting up for the same thing. But the corroborating factor there was not just this price action in the market and kind of a wave structure where you see an initial peak and then a sharp sell-off and then getting back up and barely exceeding that peak before another sell-off takes hold. But there's a very consistent cycle where between mid-September and mid-October on that 2-year sequence, there was a sharp sell-off in the equity markets, and it even happened during some of the odd years in 2011 and 2013 as well. So I had a large synergy of signals, indicators, analogous periods, cycles, all telling me to look for a 10% drop during the first 2 weeks of October. And the final trigger for that was a 1 to 4 week sell signal that was triggered in the NASDAQ 100 on October 1st, published in my weekly relay publication. But that was kind of the starting pistol being fired, and told me to look for this 10% drop in the first 2 weeks of October. And the primary downside targets were right around 7,000 in the NASDAQ 100 futures, 2,700 in the S&P futures, and just below 25,000 in the Dow. So with the markets, and each one of them fulfilled that, bottoming on October 11th, and signaling a quick, sharp rebound. So you've got that initial stage of a sell-off, but it leaves open the potential for another leg down in the coming weeks. And there's a couple of key indicators that I'm watching to really clarify that and give me specifics where a potential second sell-off is concerned.
Does this mean that we should be ready to perhaps short stocks then every February 2nd in anticipation that we're going to see a drop between the 3rd and 12th?
No, and actually the bottom came between the 3rd and the 12th. The sell-off started in most cases in January, but it was that bottom that took place in that 10-day period between February 3rd and 12th. And if that's a 2-year cycle, you really wouldn't be looking for it to happen again till February of 2020, or January and February. But that's just one analogous period. And one of the things that I point out with that too is you will see patterns like that occur and be more consistent when the market is in one consistent trend throughout that entire period, which is what we've seen in equity markets. They have been in a bull market since the March 2009 lows. If what I'm expecting comes to fruition and we start to see a topping phase and go into a bigger corrective phase over the next 1 to 2 years, then by the time we hit February 2020, we're into a different type of trend structure. So something like that probably begins to diminish in its impact. So that's, as I said, that's one analogous period that really corroborated a lot of indicators that were telling me to look for a quick, sharp drop between late September and mid-October. When you come into the beginning of the year, you often will see initial moves that do take place in the early weeks of the year, but they're often counter-trend moves. So that again is why I say if the market is entering a different trend structure over the next year or two, then that pattern is likely to alter. But it's a lot of other things that I'm looking at. That was just kind of the initial corroboration to this early October plunge cycle, I called it, that was projecting a 10% drop. But it's what happens between now and the end of October that I think is really the key to the bigger trend, the broader outlook. The NASDAQ 100 has gone as far with this sell-off as it can and still be considered a sharp correction. If it closes below a specific level and turns my weekly trend indicator down, that would then elevate it to a larger magnitude sell-off, and that trend signal is something that hasn't been seen all year in the NASDAQ 100 and not since some key levels a couple years ago. So it's a lot of factors coming together, many of them already unfolding here in the first couple weeks of October, but now we enter the real decisive period.
We'll have more with Eric Hadik when This Week in Money returns.
Arctic Star Exploration, operated by a team of proven mine finders, is focused on diamonds in Finland and the Northwest Territories of Canada. Work programs are underway in Finland and Canada. Arctic Star trades on the TSX Venture Exchange symbol ADD, on Frankfurt symbol 82A1, and the OTCQB symbol ASDZF. Please visit our website arcticstar.ca or call us at 604-689-1799.
I'm Brian Fowler, president of Blind Creek Resources Limited, listed on the TSX Venture Exchange, ticker symbol BCK. Blind Creek is focused in the Yukon, Northwest Territories, and British Columbia. The company's key property is the Blend Project, one of the largest undeveloped lead zinc silver deposits in Western Canada, plus plans to advance the recently acquired, fully permitted historic engineer gold mine in the Atlan District of Northwestern BC. Check us out at blindcreekresources.com.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back to This Week in Money. We're speaking with Eric Hadik, president of InsideTrack.com. Eric, you were saying we could, if things go further on the NASDAQ, it's more than just a 10% correction? What would you call this phase?
Are you asking the phase if it goes beyond that, or
if
the
it
phase
goes,
we have just gone through?
Well, I guess we could. We want to go and see what happens if the NASDAQ loses more than 10%.
Well, to me, that's then signaling that it's the first stage of a larger degree decline, if you want to call that ultimately a bear market. But by a lot of definitions, the bear market is not a bear market until you've already seen a large chunk of the selling. So it would tell me that instead of being a 2 to 4 week or a 1 to 2 month correction like we've seen multiple times really since 2014, these have all been kind of comparable things on a cyclic basis, where in September, October of 2014, and then July, August of 2015, and then December 2015, January 2016, and then again in January and February of this year, you've seen these 1 to 2 month quick, sharp sell-offs. So that, right now, that is all that the equity markets have done. So if they wait a little bit of time and then drop to new lows, they would be both surpassing the duration of many of those previous sell-offs and also breaking down certain indicators that tell me it has escalated to a higher level. So if something like that happened, I would look for some continuation on the downside, then a rally back to a lower high instead of a higher high, and then that would set the stage for a much more dangerous period, which fits with my longer-term outlook looking at second quarter, third quarter of next year for more damage to be done in the markets. But that overall outlook doesn't in and of itself indicate whether the final top is intact yet. That's where I need some intervening indicators to tell me, okay, we've seen the final top, or we just saw another sharp correction. We'll go back up and retest those highs one more time and then start to enter a more prolonged decline. So that's where my work is at right now, and that's why really the next 2 weeks are so decisive where that's concerned. And in between now and then, that's when I rely on shorter term indicators to get me in and out of the market. I had put out some special bulletins, special alerts last week on October 11th saying that, okay, we've hit these downside targets. It's time to get out of the initial short positions and look for a quick, sharp rebound of 3 to 5 days, and that should get back up to at least 25,800 in the Dow, possibly as high as 26,100. The NASDAQ 100 the futures were looking to rebound to about 73.40, maybe as high as 74.40. So those short-term indicators help me gauge what to do in between while I'm waiting for these intermediate and weekly indicators to either confirm or tell me that we've seen the extent of this move and it's time to prepare for the next one.
Eric, so much trading now is done by bots. You sound like you do it through experience and your own eye.
There is a lot of that. I still do give even a certain percentage of that to discretion, because I think that until artificial intelligence is perfected, I think there are still things that your brain and your subconscious, after 30 plus years of doing this, pick up and file away that maybe you don't think to factor into an algorithm or some sort of trading program. So I have many very specific objective indicators, and they're the ones that ultimately filter my cycle and wave and other type of more subjective analysis. I've seen the advantages and the pitfalls of both, with the subjective analysis, the wave analysis, the cycle analysis. There's so much ambiguity with identifying where you've gone wrong or where it's even confirmed as right. And a lot of money can be lost or given back during that ambiguous period. So that's why coming at this first and foremost from a trading perspective and a very practical, pragmatic, money management centered approach, that's why I use the very objective technical tools to give me my trading triggers and to tell me when I'm wrong on, or even if something is just delaying, if a cycle is stretching out a bit as they tend to do. I know I talk a lot about the cycles, but they're the backdrop. They're the foundation for the more specific analysis and trading strategies that are developed from that.
We'll have more with Eric Hadik right after this.
Hi, I'm Douglas Mason, President and CEO of Rainy Mountain Royalty Corp., RMO, on the TSX Venture Exchange. Rainy Mountain Royalty Corp. is a Canadian-based mineral exploration project generator. The company currently holds multiple property interests in Ontario with joint venture partners and is seeking further joint venture partners for other drill-ready properties in our portfolio. For more information, please visit our website at rmroyalty.com or call me at 604-922-2030.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com. This Week in Money is archived online at TalkDigitalNetwork.com.
Welcome back to This Week in Money. We're speaking with Eric Hadik, President of Inside Track and InsideTrading.com. Eric, what do you see happening with crude oil over the next 3 months?
Crude oil just completed some pretty important multi-month cycles when it retested some key resistance in early October. I have discussed a pretty consistent 15 to 17 week and an overarching 32 to 34 week cycle in crude. And that cycle timed lows in November of 2016, June of 2017, and then February of 2018. And the way that my cycle progression tool works, it was telling me that then that cycle should invert and look for a multi-month high, ideally in the third quarter of this year. It stretched a couple days into early October. But I think that crude is going to really be in a wide and volatile trading range for a few months here. Ultimately, I've got some pretty critical support down around 63 that it could ultimately reach. But between now and then, I think that you're going to see some consolidation between those recent highs up around 76, 77, and 6-month support down around 63.
Precious metals, are they going to be making any big moves?
I still go back to some longer-term 1 to 2 year, 2 to 3 year cycles that were bottoming in most synergistically in August of this year, although there was a variation on some of them that came into play August and September. And the key thing to me about the metals was that the miners, the gold stocks, the XAU index finally fulfilled the downside price targets that I've been publishing since early 2017. And by doing that and bottoming during this very consistent, approximately 32-month cycle that has governed the mining stocks, it told me that we should be building a very important base and could be preparing for as much as a 1 to 2 year uptrend in precious metals and in the mining stocks. I always need to clarify that because at least a minority of listeners or readers will want to take that and immediately talk about gold going to the moon or the gold stocks going to the moon. And that's not what this is conveying, but it is showing that the bottom that we're setting or have just set should ultimately hold for at least 3 to 6 months and ideally a couple of years, and that from that, those markets should start to build a base, build a gradual uptrend, and then as we come into middle of next year, we'd be more in a position where you could see a bit more accelerated advances. So on the whole, I think that we are setting a secondary low in metals, and when I say that, I'm talking about big picture, multi-year, where the primary low was in late 2015 or in January 2016 in the XAU index. We saw our initial advance, which I classified as an A wave, and now this decline into August, September 2018 is the B wave, and from there we should see a C wave advance, which even that terminology tells you the whole rally is a corrective rally against the 2011 to 2015 sell-off. So I think that we're going to see another 1 to 2 year move up, but it's in the context of a larger degree corrective rally.
Eric, what's the outlook for the U.S. dollar?
I'm looking for the dollar to develop or to stay in more of a trading range that I think it has just about set the parameters for with the lows we saw back in February and March and the highs that it appears to be setting now. I do think that we're going to see a couple months of leaning more to the downside, and that may even be one of those things that allows precious metals to start to come out of their doldrums and at least set a little bit of a higher base or plateau if and when the dollar fulfills that and starts to see some selling. I think that most of the bullish news from interest rates to trade-related issues, whether it's the weakness in the yuan or weakness in other currencies, I think most of that has been factored into the market, and so it would take something pretty significant to spur another up leg. In contrast, I think there's more potential for they don't even have to be real bearish factors, but just factors that temper some of the bullishness we've seen up till now, and that's really how the markets work. A lot of those rallies are on bullish expectations, and if those expectations aren't met 100%, all of a sudden you get a significant sell-off, and people are saying, well, wait a minute, that shouldn't be bearish. Well, it's not bearish, it's more coming back to the equilibrium or the parity where it needs to be.
Eric, how can people get more information about Inside Track?
The best way is going to our primary website, InsideTrackTrading.com, and that inside is spelled with the extra I in the middle, INSIIDE, TrackTrading.com. And from there, you can access a lot of archived reports, samples of each of our publications, and contact us for additional information, additional samples, and any questions that might arise from that, and or subscriptions.
Eric, thank you so much for being on This Week in Money.
Thanks for having me back, Jim. It was my pleasure.
My guest has been Eric Hadik, CEO and President of InsideTrack.com and InsideTrackTrading.com. He was speaking to us from the Chicago area. And that wraps up our show for this week. We'd like to thank our guests, Ross Clark, Gerald Celente, Eric Hadik, and thank you for listening. If you have any questions for the show, you can send them to info@howstreet.com. I'm Jim Goddard. We'll be back next week with more This Week in Money. Now stand by for company showcase updates from American Manganese CEO Larry Reaugh and Aben Resources President Jim Pettit.
Comments made on This Week in Money are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at talkdigitalnetwork.com. This Week in Money is a production of Howe Street Media Incorporated. Executive producer is Tom Allen. Welcome to Company Showcase, an advertising feature on HoweStreet.com.
I'm Jim Goddard. I'm speaking with Larry Reaugh, President and CEO of American Manganese. Welcome back to the show, Larry.
Well, Jim, it's a nice sunny day, and I'm happy to be on the show.
Now, you've just come back from the Chinese Financial Forum in Richmond. What happened there, and what kind of news did you receive?
Well, we were presenting and exhibiting at that show, and, I was very impressed with the amount of people that showed up. I'd say that somewhere between 300 and 500 people throughout the day. And we were well received. We had a full house on the presentation, and we had a lot of queries before and after the presentation. So this is a investor forum where people are looking at the penny stocks or the low cap or mid cap stocks that they can make money on, because real estate's not the place for putting your money these days. So we were happy with that. We also had a great week. Dan McGordy published the report, the new Pentagon report, which it highlights the strategic material or metal that's for the battery, from battery materials and or for battery materials, and basically your lithium, your cobalt, and your manganese are at the top of that list. And I'd just like to say, that we've had lots of interaction with the U.S. Government down there on not only our recycling program, but we've had a lot of interaction on our patented process for treating low-grade manganese. So all these things are developing well. You have to remember, Jim, that we have patent pending, and like I say, there was no conflicting technologies out there that conflict with what we were doing. And we're hoping that all the syntax will be approved here very soon, and we can move on with our patent. And we can also move on with filing another patent, because we've developed a methodology for a chemical methodology for getting the disassembly of the cathode materials from the foils. So that'll be another patent. And while we're talking about the patents and everything, there's a lot of companies that we've talked to that are waiting for those patents to be granted, and they're waiting for results from the pilot plant. Now, we have to be very careful about making sure that we lock up and file everything that we need on any existing patent that's been pending, or a new patent that we'd be applying for, and we'll be applying for at least one. So, this takes time and effort. You can't rush these things, and you've got to make sure that your bases are covered. So, We are pretty excited about the pending patent applications and getting started on the pilot plant, which we're waiting for some long lead items that developed from the new technology that Chemetco is getting patented for us. All these things are very interesting and take a little bit of time. And I've noticed in the news, Jim, that there's a lot of talk about the circular economy, on recycling everything from plastics and to batteries to metals. It's beginning to get a life of its own out there. And somebody had said that this is probably the greatest opportunity in the history of mankind to get involved in the circular economy by either as an investor or, your own process. So all these things are building up to what I would call a good fall here. And we're in the center of that, certainly on the recycling. We want to maintain our lead. And, it just goes without saying that there's a lot of value of material, although people were saying there was no value in a spent battery 2 or 3 months ago, and now they're beginning to realize that there's a hell of a lot of value in that. So, those are some of the things that I wanted to talk about. We put out a press release on the new Pentagon report that highlights strategic need for battery materials earlier in the week. And we certainly cover a lot of those bases. So I just want to reiterate that. And I'm looking forward to a very relaxing weekend. Last weekend was a short one for the staff in here, as we had a conference to go to on the weekend. So I'm looking forward to a relaxing weekend and try to get over this cold. You may have noticed there's frog in my chest. So that's the short message for today, Jim.
Larry, for people who are new listeners, can you maybe just explain what American Manganese does?
American Manganese is a critical metals company that has a patented process for taking very low grades of manganese and economically, depending on the price, which I think is getting pretty close there right now, depending on the price, economically produce electrolytic manganese metals, which would be include the electrolytic manganese dioxide that's used in the batteries from extremely low grades in Arizona. We've adapted that technology to move ahead with the recycling program. A lot of the chemistries are the same, and we're patenting that process now, so we'll be mining batteries here within a year, I'd hope. And so the company is progressing nicely. It's something that people should put on their radar screen. We're traded on the Toronto Venture Exchange under the symbol AMY. We're traded in the U.S. under the symbol AMYZF. And we're traded in Frankfurt, Germany under the symbol 2AM. You can go to our site. We have a very informative website out there, AmericanManganeseInc.com. Or you can contact the office here at 778-574-4444, or you can actually send me an email at LREAUGH@AMYMN.com.
Larry, thanks for the update.
You're welcome.
I've been speaking with Larry Reaugh, CEO and President of American Manganese. I'm Jim Goddard. Our conversation took place on October 19th.
Comments made on Company Showcase are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at HowStreet.com. Company Showcase is a production of How Street Media Incorporated. Welcome to Company Showcase, an advertising feature on HowStreet.com.
I'm Jim Goddard. I'm speaking with Jim Pettit, CEO and President of Aben Resources. Welcome back to the show, Jim.
Thank you very much.
Jim, you just put out a news release. What's in it?
Well, it's the results from the 3 holes that we drilled on the south boundary zone. That's about 1.5 kilometers south of the north boundary zone where we're concentrating on this year, where all our drilling, except for those 3 holes, are in the north boundary zone. North boundary zone is where we hit some incredibly high grade. We did last year. We followed it up this year. And then with some more step out holes on our, after that first hole we came out with, which was incredibly high grade. We did some step out holes, came out with, I think it was about 8 holes around it. That was good news. The market did sell off a little bit. But that had more to do with probably the time of year than anything, because they were good results, and the market did bounce back, very well. And then, when we were doing our work in the north boundary zone, we actually moved the rig to the south boundary zone to give us some time to get some assays back on the north boundary, so our geos had something to work with and could help guide the program. And while we were drilling those 3 holes down south, the mineralization was pretty outstanding. We could tell we were in a really good zone. We did do a press release on it, and we just got the results back. We put them out this morning. The tenor of the gold in the core was really good. There's a lot of it. It's not high grade like what we hit in the north boundary zone. Matter of fact, on pretty much all 3 holes, it's basically from trace to 5 grams at the high end. But the amount of mineralization throughout the hole is really telling. If I would encourage people, if they go to take a look at the news release and click on the cross sections of the holes, and you can see the tenor of the gold throughout, and that's pretty telling. The core itself, it's I don't know. It's telling us there's something there. Telling us we need to go back and drill more, for sure. These 3 holes were the result of a geochem anomaly as well as an old geophysical EM anomaly. So what we've hit is probably just the edge of it. We think we could go back and do a lot better next year, which we will. We have now flown the whole valley, actually, with the new EM airborne 50-meter spacing. That's going to be a wealth of knowledge for us, because really the program's been really based on geochem, with the exception of this one small area that had a bit of an old geophysical survey done on it. I think there's more to be seen there, to be honest with you, and so I'm quite happy with it. The market did again sell off, just like it did on the last news, but it's recovering. It looks like it's recovering. It's very well bid. I'm pretty pleased with it all. I think so far what we're seeing is a sort of a different reaction in our market than we did last year. When you put out news, it became a selling event, a liquidity event to get out, because of the timing of, it's coming to the end of the season, et cetera, et cetera. I think we've got news coming out probably through well into December. We've got 24 more holes to report on, as is stated in the news release. And they'll come out, probably over, the next month and a half to 2 months, for sure. So, I think there's lots of news to be had.
Jim, for people new to Aben Resources, what are you all about?
Well, we've got 3 projects. This is the main flagship property in the Forrest Kerr area. The Golden Triangle area of BC, northwestern BC. It is certainly it draws the most attention. That particular area is well known for its past discoveries and current discoveries, and is definitely well known for high grades. That's evidenced by the Snip mine, the Eskay Creek mine, now the Bruce Jack mine. It's pretty amazing. The Bruce Jack mine actually probably created about $2 billion in value for investors. So that's the potential in this area. And Our other projects, we've got one in the Yukon, Justin, which is tied on to Golden Predator, right on strike with their 3 Aces ore body. We'll have some news probably in November about that. We've got assays coming from some trenching work that we did this year, like just a 10-day program. And we've got a project in Saskatchewan called the Chico, which can be drilled in the winter. Obviously, that's why we picked that one up, to give us something to do through the winter and help support the market price. And it's just south of Cloud Resources, or what was Cloud Resources, now the SSR property, south of the CB and Santoy deposits. And SSR has picked up all the land on an option agreement between those deposits and our property. And they're doing an amazing amount of drilling there. I think in total it's about 40,000 meters of drilling, but in the new option ground it's, I think it's about 18,000 meters of drilling. And, we're watching carefully what they're doing. We're paying attention to their discovery model that they're using. And I think by the time we get ready to go in there, probably in February, we're going to be well prepared.
Jim, where's Aben Resources traded?
Well, Aben's traded on the TSX Venture under the symbol ABN.V. We're traded in the U.S. OTC QB, actually, ABN.V, and in Frankfurt, E2L2.
And if people wanted more information about the company?
They can go directly to the website. It's a great website full of info, or they can call Aben at 604-687-3376 and ask for Don Myers.
Jim, thank you so much for the update.
You bet. Thanks.
I've been speaking with Jim Pettit, CEO and President of Aben Resources. I'm Jim Goddard. Our conversation took place on October 16th.
Comments made on Company Showcase are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at HowStreet.com. Company Showcase is a production of How Street Media Incorporated.